Hey everyone! It's your favorite beginner FX trader, Kamapoko. Back at it again with another market analysis video. Today we're diving into the US dollar to Japanese yen pair. I've also got some key warnings for you, so make sure you stick around till the very end. It's gonna be a wild ride. So, how was your trading day yesterday? Drop a comment below and let me know. As for me, yeah, I jumped in yesterday, but I'm still holding my position. Before we get into today's analysis, let's take a quick look back at what happened. I followed my own advice, a rare occurrence I know, and went short right at the 4-hour high, following the strategy one shared. My entry was a little, well, let's just say it was aggressive. Check out this chart. See that mountain peak? That's where I entered. You know that old trading proverb, you can't catch the top and the bottom? Yeah, I don't subscribe to that. I want it all. My take profit target is right here, but if the momentum keeps going, I'm gonna move it to this other spot. The lower time frames are showing a nice downtrend, and I've already moved my stop loss to my entry price, so I can't lose money on this trade. I mean, I can, but I won't. I'm a genius. The Tokyo session started with a strong upward surge, so the market's looking a bit dicey right now. But I'm a gambling man. I'm just gonna hold on and see what happens. If this thing drops and I hit my target, I'm buying myself a bottle of champagne. If it hits my stop loss, you're buying me one. Deal. Deal. Seriously though, what did your trades look like yesterday? Let me know in the comments. And hey, I'm gonna be sharing more of my genius market analysis on YouTube's community tab, so make sure you hit that subscribe button. Also, for all you serious traders out there, I post super detailed, boring, adult-like analysis on my blog every single day. If you're into that kind of thing, check it out. Alright, let's get into today's US dollar to Japanese yen market analysis. If you're wondering about the weekly time frame, go check out my video from the beginning of the week or, my blog. For everyone who isn't a complete degenerate gambler, checking the weekly is a must. First up, the daily chart. Look at this thing. It's a textbook uptrend. The recent high is here, and the last higher low is right there. We're currently sitting around that last higher low. The question is, are we gonna bounce up from here, keep going down, or just go sideways? I don't know, man. I just really want it to drop down to that higher low price level again. Please, market gods, hear my prayer. For now, as long as the price doesn't clearly break below that last higher low, I'm staying bullish on the daily. Next, let's look at the 4-hour chart. This one is in a downtrend. The most recent low is here, and the last lower high is right here. The recent price action saw us shoot up to that last lower high and form something that looks kind of like a double top. There are a bunch of long wicks on these candles, which tells me the bulls and bears are in an epic cage match. As long as the price doesn't clearly break above that last lower high, I'm staying bearish on the 4-hour. Now for the 1-hour chart. This one is confusing. It's like a bad date that can't decide if it likes me or not. You could argue for an uptrend or a downtrend. But, according to my highly scientific and very cool methodology, the most recent high is here and the last higher low is here, so I'm still seeing an uptrend. Barely. Okay, based on all that analysis, I'm gonna share my top secret mind-blowing trading strategy. I'm gonna need $5 for the rest of this video. Just kidding. Mostly. Like I said, I'm already short, and my main plan is to keep looking for short opportunities. My first target is right here, at that most recent high on the 1-hour chart we just looked at. We're currently in a range, so I want to wait for the price to get as high as possible before I consider jumping in with another short. My second target would be somewhere around here. Since we're in a bit of a downtrend, you could also consider a short at this lower high. Both of these strategies have their pros and cons, and your stop loss location would be different for each. But what if my brilliant short strategy fails? No problem. I've got a plan B. If the price breaks above the 4 hours last lower high with a strong candle close, I'll abandon my short positions and switch to a long. That's the main plan for today, folks. Oh, one more thing. Shorting a breakout below the bottom of this range is super risky. The price could easily bounce off a support level just below, which means your potential profit is tiny. And we don't want a terrible risk-to-reward ratio, do we? Just a heads up. That's pretty much it for my trading ideas. If I come up with any other insane strategies or if the market changes, I'll be sure to update you all on my blog, just for your reference. Alright, that's all for today. On this channel, I'll keep sharing my market analysis and my interesting trades. If you're interested in that, feel free to hit that subscribe button, give this video a like, and leave a comment. Catch you all next time.